mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive.
He said that he did this because he didn't mind building up the cash hoard at this point because of the environment that's taking place. I guess the economic environment, the stock outlook. I mean, I tried to pull a little more out of him later with another question, and he didn't bite on it. But what are you going to do with all that cash? Why do you need all that cash? He says he can't find good places to put it, and that makes you wonder if he thinks the entire market's overvalued.
Warren Buffett has recently made headlines with a significant reduction in Berkshire Hathaway's Apple stock holdings. According to Berkshire's quarterly earnings report, Buffett sold approximately $51 billion worth of Apple shares in Q2 2024, decreasing their stake from $135.4 billion to $84.2 billion. This shift means Apple now comprises about 30% of Berkshire's portfolio, down from 50% 2 quarters ago. This massive sell-off highlights a strategic move by Buffett, reflecting his concerns over potential future fiscal policies and market conditions. Buffett's decision to lock in profits on Apple, despite acknowledging the company's strong business fundamentals, suggests his apprehension about rising taxes and an overvalued stock market.
That may surprise you. We don't mind paying taxes at Berkshire. We are paying a 21% federal rate on the gains we're taking in Apple, and that rate was 35% not that long ago, and it's been 52% in the past. The federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings, and they can change that percentage any year, and the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies, I think that something has to give, and I think that higher taxes are quite likely, and if the government wants to take a greater share of your income or mine or Berkshire's, they can do it. And they may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. I would really hope with all that America's done for all of you, it shouldn't bother you that we do it, and if I'm doing it at 21% this year and we're doing it at a higher percentage later on, I don't think you'll actually mind the fact that we sold a little Apple this year.
Buffett's actions are driven by his outlook on the U.S. economic landscape, which he believes may soon require higher taxes to address the growing federal deficit. The corporate tax rate, currently at 21%, has been as high as 52% in the past, and Buffett anticipates that it might rise again. By selling Apple shares now, he aims to pay lower taxes on the gains rather than face potentially higher rates in the future. Additionally, Buffett's comments on the current market's valuation and the economic environment characterized by high inflation, rising interest rates, and geopolitical tensions underscore his cautious approach. He has also increased Berkshire's cash holdings to a record $276.5 billion, signaling his preference for liquidity amid uncertain economic conditions.
Your investment manager's views of the economics of Apple's business or its attractiveness as an investment changed since Berkshire first invested in 2016.
No, but we have sold shares. We looked at common stocks or marketable equities or the things that people love to look at as being businesses. When we own a Dairy Queen or we own whatever it may be, we look at that as a business. And when we own Coca-Cola or American Express or Apple, we look at that as a business. We have no attempt made to predict markets. We have no attempt made to pick stocks. And we own Apple, which is an even better business. And we will own, unless something really extraordinary happens, we will own Apple and American Express and Coca-Cola when Greg takes over this place.
Overall, Buffett's decision to sell a substantial portion of Apple stock, while maintaining that his view of the company's business has not changed, reflects his strategic shift towards preserving capital and preparing for possible fiscal and market challenges ahead. This move highlights Buffett's adaptive investment strategy and his ongoing commitment to navigating complex economic realities.